Good afternoon. This is Chris Brecher with the Simpler Trading free video for March 3rd, 2025. Why were we short? Well, I got to tell you right now, there were a lot of negative signs, especially the Russell, and we keyed off the Russell for today, but I want you to realize that this whole thing about historical stuff and all that, that's a good way to lose your butt. Let me show you why. Number one, AAII sentiment plunged a 41% divergence between bulls and bears. Historically, this is bullish for stocks. Well, this reminds me of if I try to go to a restaurant and I see that the rating is 1 star, the last one rating, and I have to look at it. You want to only look at the food. But then you look and it's like, well, we had a party of 14 and we just showed up and it took them an hour to seat us. So we gave them a 1. That's not exactly fair. Why am I even saying this? Because right here you see historically bullish for stocks. But if you read between the lines, go and check out what happens 1 week later when the bull bears below 40%. Look at that return. That's pretty crappy. Look at the next week. It's pretty crappy. So just because there are that many bull-bear ratio doesn't mean you're going up this week. Then you have the next thing that you know and I know everybody and their mother looked at, and that is the first trading day in March performance. So you'll see in here, and this is like Almanac Trader, Jeff Hirsch's stuff. I really appreciate him sharing it. And you're going to see that, yeah, a lot of times it goes up. 68% of the time, that's almost like a dart throw. The point is, it's not a guarantee you're going up. So keep that in mind. The other thing I want to show you in here was we keyed off the Russell. Now, why on earth did we key off the Russell? Because the Russell has been underperforming for weeks. It's under its 200 and definitely under the 50 moving average. When this is under the 200, everybody is hoping this will reclaim the 200. But if it doesn't, then you worry about the ES and the NASDAQ going to at least approach the 200. So that's the danger in here of thinking that the first day of the month you have to go up in March, or if the sentiment's too negative. If the thing that made you go down last week was growth concerns and the growth concern index is falling apart, then you got to look for short ideas, which is what we did. Bear flag. We played the bear flag. Luckily, I was triple broadcasting, shouting out these bear flags. And as you see, they worked. So just keep that in mind on these things about the bear flag, and they worked. So the key now is, where do you go? Well, I think things are getting a little overdone on the downside when it comes to the growth concerns, especially with the bond market keeps going up. Now, when 2023 this happened, the Russell had a bounce and the S&P had a strong bounce. Now, just keep that in mind. I'm going to be watching that because this Russell is what pulled down indexes all day. So as you see, Russell went down, ES went down. Russell bounced, the ES bounced. Why did the ES bounce so much? It bounced so much because the ES has a lot of stocks that have buybacks. So we're playing some things that might have a buyback blackout later. So the Walmarts, the JP Morgans. But overall, I want to find also for the first time some long ideas. So just keep that in mind. We're going to look for long ideas tomorrow. We sprinkled some shorts into next week. But if the market goes down enough, I think you're going to see more dovish talk about tariffs. Take care and have a great night. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.